Good morning, guys. It is Friday, June 7th, 2024. This is Bathrobe Business. I got the coffee. There it is. And I got the news. So I didn't have a video yesterday because I didn't feel like there were any news stories worth reporting on. So we're just going to start on it today. I've got a number of stories to share with you guys. And the big headline story I'm going to talk about is de-dollarization, BRICS, and what I think it means for the world economy. And so I'll share my theories on what I think is happening in the world right now and how I'm probably going to play it. So let's jump into the news real quick. So let's start with the first story, and that is jobs. So jobs are doing very well. So this story from CNBC is the jobs report from this morning. So the United States added 272,000 jobs in May, much more than expected. So nothing that's too astounding here, but jobs came in well over estimates. So just a couple of days ago, we reported the ADP numbers, and they were down. But recently, ADP numbers have been down drastically compared to the Labor Department. So this is another example of that, as non-farm payrolls added 272,000 jobs for the month of May, up from 165,000 in April, and well ahead of the Dow Jones estimate of 190,000 total. One thing I think is of noteworthy is where these jobs came from. So healthcare was 68,000, government was 43,000, and hospitality and leisure was 42,000. Now, the interesting part about this is hospitality and leisure has traditionally been the lead. Well, for the last 2 years, hospitality and leisure has been the leader in job creation, and now they moved to a second and third position. So it makes me think that one, people aren't spending as much on those extra frills as they used to, which makes sense due to inflation. But also at the same time, that industry is becoming quite saturated. There's not much more growth happening in it. So just kind of a noteworthy thing. I think that is the only real sign of weakness in the jobs report, aside from the fact, of course, that in addition, sorry, that's the next story. In addition, unemployment did go up. So unemployment went up to 4%, where just a couple of months ago, it was at 3.7. So unemployment is rising, not to anything scary, because anything, I think, below traditionally 5 was considered full market employment. So this is still well above where we should be in a healthy economy, but it is up on the rise a little bit. Now, these numbers are a little bit inflated. And what I mean by that is May is the month that many people graduate. So those that are graduating college are finding jobs in the in the market. And then for high school kids, this is usually summer job season. So these numbers are a little bit bolstered. So it's not surprising that the May numbers would be high. Now, I didn't check the historical books on this. This is just my own theory. I don't know if May is traditionally a strong jobs month, but I would just suspect it is, simply because May, June, that's when a lot of employment is going to happen because of graduates. So yeah, there's that. Let's move on to the next story. So the next story I will talk about just highlights kind of some strength in the U.S. economy as well in this regard. So this one is going to be about millionaires, everybody's favorite subject. So here's the story from CNBC. The U.S. added about 600,000 new millionaires last year as AI fueled the markets. This is kind of a stupid article. There's not much information here. This AI thing, if you actually read the article, it doesn't really say that AI is creating millionaires. That's why I feel like this article is deceptive. And it doesn't even say what industries are growing. All it's saying is that the U.S. outpaced every other country in adding 600,000 new millionaires, more than China, more than Europe, et cetera, but it doesn't actually say anything of value. All it's just saying is strong economic growth. Now, I'm sure this is also in part due to asset growth, right? Because in an inflationary market, assets grow, stocks increase in value, gold increases in value, real estate increases in value, cars increase in value. So this is measuring net worth, right? This isn't cash on hand. So I'm not surprised that that number in a high inflationary market, your millionaire class is going to increase in wealth, but that doesn't mean actual cash on hand. So in an inflationary market, everybody can become a millionaire if a loaf of bread costs, $10,000. So this isn't necessarily a good story, but I think it does still show some strength in the U.S. economy, given the fact that job growth is strong. given the fact that the stock market is relatively high. I think there is some authenticity in here, but I would underpin it with the fact that a good chunk of this could just be inflation. Next story. So the next story, we're going to put on our conspiracy theory hats a little bit. So the next story is going to be about Moody's downgrade of several regional banks. So Moody's has downgraded 6 U.S. regional banks because of their commercial real estate exposure. Why I think this is conspiratorial. Moody's did not downgrade New York Community Bank up until it was in dire straits, and then it became junk bond. But even after that, they actually a month later actually upgraded it from it's the class is a B3 to a B2, or actually, you know what? Let's go to that story. Yeah, it went from B2 to B3, so it actually went up a couple notches, despite the fact that nothing had actually changed. And I think that's because New York Community Bank is a massive bank, whereas these regional banks are much smaller and are much more likely to be affected by stories like this, because downgrades are going to hurt their deposits. Why I think this is a bit conspiratorial, because these smaller banks oftentimes, while they may have more exposure to real estate, are often based on smaller real estate holdings than large megacorps like New York Community Bank. So I feel like this is a personal attack on these banks, because what we've seen in the market is the gobbling up of these smaller regional banks by larger and larger banks, namely JP Morgan Chase, but multiple others. So this, I feel like, is a very, very bad thing, because this is pushing for more centralization, and it's pushing for more of these banks to be bought out by larger banks, because now these banks are classified at lower rates. Their rating is lower. People are less likely to invest with them, less likely to put deposits into their accounts, and less likely to do business with them. So this, just by downgrading them, you are actually exposing them to risk. And that's why I feel like this is more of a political move, or maybe political isn't the right term, but more of a conspiratorial move from larger corporations to push these banks into selling out and to being purchased and gobbled up by a larger corporation. Now, is that a bit conspiratorial? Sure, I think it is, but I don't think it's wrong either, because I think that the whole trend of smaller banks being picked up by larger ones has been in the industry for the last 2 years now. So I would be surprised if there wasn't some pressure happening in these credit agencies, because we've seen large corporations put pressure on credit agencies before, namely the 2008 financial crisis. So I don't think these agencies are as pure as they seem. I think that this is a conspiratorial move, personally. So next story we're going to talk about. Okay, next story I'm going to talk about is we're now getting into China. So the first thing I'm going to talk about is Chinese exports. So Chinese exports are solidly rising. So this is an article from Reuters, and it just talks about an article pretty much that we discussed a couple weeks ago. It's about a month and a half ago that we talked about that Chinese exports are up. And this is for the second straight month, Chinese exports are up. Remember, this is in the face of Biden's economic sanctions. This is still in the face of Trump's economic sanctions, because the Trump sanctions never actually lifted with Biden. Biden just doubled down and increased them and their efficiency. So this article is talking about just that despite the fact that we have major economic sanctions, the export market is actually going very strongly across multiple sectors. There was another statistics I wanted to underscore here, and now I cannot remember it. But the link in this article is, here it was. A lot of the economic activity in manufacturing isn't domestic. It is international, because even though their domestic market is actually slightly depressed in China, still under pressure from their real estate crisis, their international markets are still incredibly strong, and it's growing. This is also bolstered by high-tech industry as well. As we've talked about before, China is investing heavily in chips and AI, and it is starting to pay off as they are exporting large-scale high-tech devices. So this is a pretty major story, because despite the fact that U.S. is putting major pressure on China, they are actually accelerating. And it's kind of showing the fact that despite the fact that we're trying to decouple from China, their strength is unquestionable, and they've now become pretty much self-sustaining. They don't necessarily need us in order to have powerful exports and a powerful economy, which leads to my next story. So next story we're going to talk about is BRICS. So let me bring up this article. So this article is mostly about de-dollarization. So I am not familiar with this agency, with this news agency, Responsible Statecraft. While it could be a shady agency or shady news agency, I don't know. But the statistics that they're pulling do seem to be correct, and that's why I think that they should be taken just at face value. And this doesn't necessarily talk about anything in favor or against any one government. So that's why I would say to trust it. So this article is talking about BRICS and de-dollarization. Now, it is no secret now that China is moving away from U.S. bonds. They are constantly dumping. They are stopping repurchase of new U.S. debt, and they are investing heavily into gold. But what's interesting is, in addition to that, all these BRICS countries seem to be doing that. So in 2002, in 2022, when the war in Ukraine started, Russia became a gold standard country. So they backed their ruble with the gold. It became 5,000 rubles equals 1 ounce of gold, or something like that. But China is still technically a fiat currency. However, what I think China is actually doing is creating a de facto gold-backed currency, because in BRICS, there is no centralized currency. So unlike the euro, unlike the petrodollar, Russia, China, India, Brazil, now Iran, all of these countries that are joining have their own individual currencies, which makes settlements a little bit difficult. So they're trying to find workarounds with this. One thing that I feel like they're trying to do now, that they're talking about building a blockchain-based system that can do settlements instantaneously across borders, and I think that's going to play a part in it. But what I think they're trying to do is to create a standard of fiat based off of international wealth. So what I mean by that is, with true gold-backed currencies, you say that this amount of your currency equals, actually, is my camera up? I'm doing something with my hands, so I better show you. So with a true gold-backed currency, you're saying this amount of your money equals this amount of gold, right? It can be 1 to 1, it can be 10,000 to 1, but it's a fixed number. Now, when you do that, there are limitations to what you can do economically. You can't pull as many levers. One of the reasons governments decentralize is because they can print money, they can manipulate the markets, etc. You can't do that when you have a commodity-based currency. However, what if you showed the wealth of your nation by tying it to a hard asset like gold, and therefore, when you have a fiat currency, it is still backed by your government, but your government is backed by the wealth that you have accumulated. That is my theory of what is going on here, because China is growing in its assets, is increasing its gold assets exponentially year after year. So just in this article, let me switch over back to it. Sorry. So just in this article, it talks about how China has increased its gold reserves to 2,264 tons in the first quarter of 2024 alone, up from 2,235 tons in the fourth quarter of 2023. This is double the share of the previous 5 years. So they are growing their gold reserves exponentially. But in addition, they're not the only ones. Another major BRICS country, India, is doing the same. So India is not accumulating it at the same rate that China is, but actually India has individual gold reserves that are high globally based on most countries. But the Reserve Bank of India has been buying gold since 2017. Over the period, it has increased its gold holdings by over 260 tons. And India continues its gold buying spree in April. So India is constantly reinvesting a lot of their excess wealth in gold as well. So what I think these countries are doing is they're trying to stabilize their overall wealth without having to truly back it to a gold reserve. I think it's an interesting move. This is, again, my personal theory, but I think it's a very strong theory considering the fact that three now of the four countries, of the four major countries, are investing heavily into gold, and they're going to use it to stabilize their own economies so that they can trade these currencies much more easily, so that there isn't huge disparity between the currencies, but so that the currencies are actually bolstered by the strength of the commodity holdings. So that's my 2 cents. That's what I think is going to happen. Now, what would I do with this? I would buy gold. I would definitely buy gold because, as we've talked about on this channel before, I have never really owned gold, but I've always watched gold, and gold prices are up. So right now, gold is slightly down. Let me share this. What is the current gold price? So gold is currently at $23,024. That is still that is a record high as of like a month ago, but then they broke that record by going to 2,400. But these are record prices for gold. If these countries are going to continue investing in gold and putting their deposits into gold, gold prices are just going to continue to go up. And any weakness in the U.S. economy, if we do hit a recession or if we do hit any sort of wave of bad economic news, you're going to see a rise in gold prices as well. So I think gold is definitely a powerful investment. I would definitely personally, I guess I shouldn't give financial advice, but I think looking at this data, I don't see how not investing in gold is a good idea, because I see that these prices are going to be going up no matter what you do. Just inflation alone is going to take these prices higher. So I probably will be buying gold myself. I'm not a crypto guy, as I've talked about on this channel before, but I think gold is actually a smart strategy given the fact that we're almost moving into a gold-backed market once again. So yeah, that's it. That's my stories for the day. I hope you guys have a great weekend, and I'll see you guys Monday morning.